Hi guys, I just want to talk about a method of stop loss, which I personally find quite nice. You've probably seen from some of the other videos that we've done, and there's all sorts of methods that you can set your stop loss by. If you have a very tight stop loss, then you can potentially make more gains, more profit. But the downside to that is that you get stopped out more often. So, everybody has an individual method or way that they like to have their stop losses. Some people like them very tight, some people like them very loose. And it's something that you are going to have to, work out really for yourself. I'll show you a method which I find is kind of like a happy medium. It's not too tight, but it's also not too loose. Let me just explain that for you. So it's based on the Fibonacci and a ratio of the waves and the retracements. So first of all, obviously, if you're looking at the markets and you're looking at your trends and your ABCs, you have your high over here. And you have a low. Then you have a lower high. And then at the bottom, you have your lower low. Okay, so you would name this A. And then you would have your B on the lower low. And then the name of the game is to look for C and guess where C is going to happen. Okay. So at the point that, so obviously, the market unfolds in front of you. So you may well be getting to the point where you've got this in front of you and you possibly see a signal to trade. You see, maybe you've got a trend line coming down that's roughly hitting into where you're looking at. Maybe you've got a previous support and resistance. And maybe then you've got your zone in place and you see your two signals to trade. Okay. So once you've done that, I won't do the whole thing, that's for another day, but once you've identified your place that you want to, or that you think is your C point, maybe you've got a signal there, perhaps you've got a stochastic and a Bollinger Band, etc. So you would obviously place your trade, but you need to figure out where do you put your stop loss. So if you firstly put your Fibonacci from A to B as you would normally draw it, and I'm going to show you how to add in another level that you can use for your stop loss. So first of all, you would need to double click on the Fibonacci and you'll see that you have these little boxes or circles or whatever they are up here on the Fibonacci. Okay? It means this is editable. I can now move it around, I can change it, but it also means I can right click and go to Fibo properties here and then add in. When you get the tabs at the top, you can change the colors and stuff. But we're going to go to Fibo levels, click on add, and you're going to add the level 1.12. The description, SL. Make it capitals, I prefer that. It's up to you how you have yours. And you're going to click on OK. And as I click on OK, you're going to see there's another level that comes onto my fib. Let's put it back on the wave. But remember, you can even draw it again now. Those levels are saved. So we draw the level from A through to B. Now, what we want to do is we actually want to take this level A and put it on the top where we think is going to be our C. Okay, so we've entered, or we haven't entered the trade, we're just looking for the stop loss. And basically, but we've entered the trade. We've got our take profit, and then we need to obviously put our stop loss. So you put your stop loss on, or even just a little bit above where it says SL here. Okay. And the reason that we don't put it directly above or below the C is this. very often what happens is price comes back up to retest that level. Okay, so can you see what happened is that we maybe thought we were going to get a C there. Very often price likes to just retest these levels, and if you've got a stop loss so tight, you're going to get stopped out. So I found, you know, obviously like anything in trading, nothing is 100%. It's not that you will not get stopped out anymore. Getting stopped out is part of trading, you know, but it helps to minimize your losses just by having that type of gap without making it so wide. So yeah, I hope that helps you guys. It's just a method that I use. Obviously use it if you see a big, massive daily level of support or resistance and it's right on there, then you might want to move it up a little bit. So just obviously have a broad perspective of the markets, see what the different time frames are doing, look at the support and resistances, the Fibonacci levels on the higher time frames, all those kind of stuff that can act as a support and resistance. So it's not necessarily a standalone way, but it's something that you can use to help you to determine where to put your stop loss. Again, I hope that helps. Please give me a shout if you need any help or if you have any questions regarding that. I'm always on the chat room, or you can pop into the office or give me a call or drop me an email. Thanks. Bye.